Hey everybody, welcome to our live earnings preview here at Zacks. I'm Dave Bartosiak. Hey everybody out there on YouTube catching us right now. If you got a chance after this video, make sure you check out my trending stocks segment of videos that I got going on. It's going to give you something to giggle about. The last one I was talking about Pokemon Go. So if you're an old guy trying to figure out what the heck Pokemon Go is, make sure to check that one out. But in the meantime here, I'm going to be talking about JP Morgan and the earnings report that they've got coming up before the market opens tomorrow, July 14th. So what are we going to expect here on JP Morgan? And I'm going to give you a couple of trades, one in the bullish camp, another in the bearish camp, and I'm going to give you my own personal opinion of how I feel that is going to end up going. So make sure you're here throughout the end so you're going to catch that. But at first, let's kick this off like we kick it off every time with our price, consensus, and EPS surprise chart here on Zacks.com. So, a few things to see here. Again, the black line is actual stock price here on JP Morgan Chase. The right y-axis will correspond to that price. Then you have the multicolored lines here. These correspond to our Zacks consensus estimate for each year, and you can see how those move through time. Great part about this is you can see the expected earnings growth year over year on this chart. You could also see throughout the course of the year, how do these earnings estimates tend to evolve over time, and this left y-axis corresponds to that actual annual EPS estimate for it. So, hang on. I've got to click here. Sorry, I had the regular price of consensus. We're missing something here. We're missing our arrows. We're missing our EPS arrows. So I apologize for that. Now I went ahead and clicked it. Here we go. Now we got our arrows. So this is going to tell us earnings beats. So like last quarter, had a 7% surprise to the upside for JP Morgan. Quarter before that, another 7% surprise to the upside. If you look back during the October report, 4% to the downside, 6% surprise a year ago, and the stock still came down. So what am I seeing here? Well, sure looks like JP Morgan has a history of giving you some great estimates in the beginning and then kind of creeping back down. Looks like that's pretty much across the board what we're talking about. But we do get some growth here, so that's good. But if you're looking over the course of mid-2015 through now, what have we had happen? Well, got flat to a little bit to the upside on the 2015 estimate as 2016 crept down and 2017 crept down. As a result, the stock's been kind of sideways to down for the most part. And if you look at where these 2015 estimates ended up, they're actually above where our 2016 number is currently. So that's a little bit troubling, right? We do have this as a Zacks rank number 3 hold. Let's go ahead and take a look at now the detailed estimates page for JP Morgan Chase. Kind of dig in and see sort of what's happening here. So if you look at the current quarter numbers, just over the last week, we've had some activity in the earnings estimate revisions. 2 analysts have come out and revised to the downside for the current quarter. 5 have done so for next quarter, 5 for the current year, 3 for next year. If you're looking at these current year numbers, that's 10 analysts in the last 60 days that have dropped their estimates. For next quarter, 8 in the last 60 days. You had some bullish behavior for this current quarter. There were 6 analysts over the last 60 days, one of them in the last week that has upped their estimate. But overall, if you look at the current quarter trend, $1.42, $1.41, now it's at $1.43. Next quarter is lower. And our current year numbers have dipped from 567 to 556. Next year from 632 to 623. So what's the story here with JP Morgan? Why is this happening? Well, think about everything that's taken place in the world economy over the course of the last few weeks, months, whatever, what have you. How are these banks really going to be making money? Because they're not going to be making it on their net interest margin because interest rates are basically in the toilet bowl right now. 1.4% on the 10-year. And you'd think with the market at all-time highs that these yields would creep up a little bit, but it just didn't happen. And a big reason for that is definitely the Brexit. Now, the thing about JP Morgan and other bigger banks is that there is some risk with the Brexit of if it happens, what will happen, how does that end up trickling down? But I don't think that's necessarily the actual root of the story here. I think that's just more that net interest margin and how are these guys going to make money? They need to lend money out in order to be able to make some serious coin, or they got to do it on the trading side. But we know that those trading desks are getting smaller and smaller and smaller, and there's less and less of that happening, especially on fixed income. So where are they going to end up making more money? Where is it going to happen? The other thing with JP Morgan, they just announced recently that the CEO, Jamie Dimon, was going to go ahead and up basically their company's own minimum wage, so to speak. So about 18,000 workers at JP Morgan. So here you're talking the customer service people, you know, the ones who greet you when you first walk into the door, and a lot of the entry-level teller positions that are out there. All of those people are going to be getting raises. So good for you. The problem is most of them have been replaced by robots anyway, so it doesn't matter. And obviously by robots, what I mean is you have these ATM kind of things going on there that are full service stations. So when you used to walk into the bank and somebody would greet you and kind of hold your hand and take you through the whole process, now at a lot of locations you walk in, maybe one person says hello to you, and then they guide you over to this stand-up ATM machine that basically does everything for you. So while it is great that he's, you know, hiking the pay on some of these, I bet you their workforce is a little bit smaller than it would be too had you not had a bunch of robots in your lobbies. So there's that. But anyway, I do think it's neat that he's going out and doing that. And this also happened just a few days after Starbucks announced that they were going to be paying their baristas a little bit more. So you're starting to see this sort of thing where maybe we'll have a little bit of wage push, sort of inflation, which is what the Fed is really looking for anyway, before they're going to start hiking up rates, which in turn would actually help out the banks. So it's kind of funny that the bank is kind of trying to push this along. Now, are 18,000 people going to make or break the U.S. economy? I'm going to go out on a limb and say no. But let's go ahead and take a look at some of these, what we're looking for, what we're expecting out of the report today. Let's look at our EPS on the detailed estimate. So again, we want to see $1.43 out of JP Morgan for this quarter. That is the most accurate estimate. So what that means is the most recent analyst to come out and make their EPS estimate came in at $1.43, which is basically where Zach's consensus estimate is. And over the last few quarters, there have been some surprises. They beat by 9 cents last quarter, beat by 9 cents the quarter before that, okay? And then you got a little bit of disappointment before then, but then another beat. So we're coming off of a couple of beats in a row, which could be a good thing for shares of JP Morgan here. But again, when we were looking at that price and consensus chart, it didn't really look like the stock necessarily moved in direct response to some of these earnings beats that JP Morgan has had. Also, we've got a Zach's rank number 3 stock right here. And a little bit of uncertainty with the Brexit, so I want you to keep all that in mind as we go and take a look at this live options chain. So coming back to the computer, we're going to take a look at the straddle view is what I like to look at. So you've got calls on the left side, puts on the right, strike price is stuck in the middle. So the stock's trading like 63-ish right now, okay? And now they've got some pretty tight strikes here, every 50 cents pretty much on JP Morgan, because, you know, historically the bank stocks just don't end up moving all that much because they're a big financial. So what's going to come out and make or break this thing? But if you're looking at the at-the-money call option and put option, as I was earlier, we were pricing at about a 2.5% move for shares of JP Morgan on earnings. That's not a huge move. And if you're talking about with the stock at 62.50 like it was earlier today, that's basically 64 ends up being sort of your top. So keep that in mind when I'm putting together these trades now too. Okay, so if I'm going to be on the bullish side of this, I want the market to go ahead and take in this report, have its initial response, but I want to catch some of the post-earnings drift. So I need to give it a little bit of time to end up actually moving in the direction that I want. So buying a call spread right here that expires on Friday is a little too, cutting it too close. So what I want to do is I'm going to go out to August 19th is what I'm going to do. So on the screen here, I'm going to come down and I'm going to change from the July expiration to August 19th. And when I scroll down here after loading that up, you'll see the 62.50 call, about $1.89 now. And then there's no 64th, but we can look at the 65, and that's 72 cents. So putting this trade on is going to cost me about $1.17. Okay, 117. That means I'm going to have $117 at risk inside of this option trade that I have on right now, right? Now, to the upside, it's the difference in the strike prices. So 62.50 to 65 is $2.50, right? So that's what I could potentially come out if JP Morgan trades above $65 at expiration, right? So in a month from now, on August 19th, when this is all said and done, JP Morgan's above 65 bucks. I'm going to cash in. So instead of having $1.17, I'm going to have $2.50. So that's $1.33 of profit on $133 of profit on $117 of risk. That's about 120% return. Pretty good for just a month. Now, on the bearish side, I want to change things up a little bit. Rather than go ahead and buying a put spread or kind of betting that this stock's really going to move down, I think because of the nature of banks and they don't really move all that much, I think it'd be advantageous to pretty much do the opposite of what I'm doing in the bullish case. But rather than go all the way out till August, I'm going to stick with this front month trade. So I'm going to come back down here to the computer and change this to the July 15th expiration. And I'll tell you what I'm going to do. Now remember, we're pricing in about a 2.6% move here. So that's basically $64, right? That's sort of where we were at. Maybe a little bit more because the stock's rallied here now, right? But I'm totally comfortable with this. So if we go out to the $64 call, we can get that for 38 cents. Now, if we sell the $65 call, we're going to pocket 22 cents or $22 every time we do this trade. So I'm going to pocket $22. Now, my risk is going to be the difference between the difference of the strike prices, which is $1, minus what I got, the 22. So you're talking 78 bucks is what eventually I'll have on the table at risk. The only way I lose all of that money is if JP Morgan expires or trades at expiration above $65 per share. So with the stock down to 63, what I'm basically betting is that it does not go up on earnings. So by shorting the at the money call, the $64 call, a little bit out of the money call, and buying a further out of the money call, I'm pocketing that 22, and I got at risk at 78. So that's giving me a chance at a 28% gain. And all I need to do to make all of that is have JP Morgan close below $64 at expiration. So that's the bull side and the bear side. Now, which one do I personally believe is going to be the trade that pays this time? I got to go with the bearish side on this one. I want to sell that at the money call, not because it's, there's a ton of premium in it or anything, but because I feel like it's far enough out. And you got to think of what's been happening to the market right now. We've had a market that's pretty much at all-time highs, retreated a little bit, I guess, this afternoon, probably while I'm talking right now. But overall, there's been a lot of buying recently. So I think I'm going to be looking for opportunities to find stocks that I can be a little bit more conservative with. And that's the other reason why I'm not going and just totally betting against this, that this thing is going to, reverse and shoot down a bunch. I think if I can just take some of the optimism that's out there and just put it in my pocket, that's probably the smartest way to end up playing this thing. Because that way I don't need a huge move in either direction. And I'll make money as long as there's not a huge move in my, in the opposite direction against where I really believe that the stock's going. So I think overall it's more conservative, and I have a much higher chance of this trade actually paying off for me. All right, so there you have it. That's my trade on JP Morgan. I did well on the Alcoa trade on Monday, so things are looking good for me. Again, I want you guys to go ahead and come back next week. Make sure you chime into the comments section down here below. Let me know what stocks it is you want me to cover next week, because they've got a bunch of them going on now. Where it's popping off. It's the middle of earnings season. Every day there's going to be a hot stock I'll be able to talk about. Hopefully, soon we're going to have some higher beta names, so we'll be able to put on some more options trades that could potentially make us a ton of money. Not some of the more boring things like this with the JP Morgan, but hey, there's nothing boring about making 30% in like 2 days, right? So again, thank you so much for joining us. Check us out at Zacks.com. Make sure you check out our trending stock videos, and I'll see you guys next week. Thanks.